Welcome! If you're curious about the future of finance, you're in the right place. Today, we're diving into Circle, trading under the ticker CRCL. Recently, its stock price has taken a noticeable dip, sparking a lot of debate among investors and analysts alike. Is this a warning sign that trouble is ahead? Or could it be a rare window to buy in before the next big wave? Before you make any moves, it's crucial to understand exactly what Circle does, how it operates, and what sets it apart from the competition. Let's break it all down so you can make an informed decision. Circle is a leading fintech powerhouse, uniquely positioned at the intersection of traditional finance and the rapidly evolving world of blockchain technology. The company's mission is to make money move as freely and efficiently as information does on the internet. At the core of Circle's business is USDC, a digital stablecoin that's fully backed one-to-one by US dollars or other highly secure assets. This means every USDC token is always redeemable for a real dollar, providing a level of trust and transparency that's rare in the crypto space. Unlike most cryptocurrencies, which can swing wildly in value, USDC is engineered for stability. It's designed to hold its value, making it ideal for instant, borderless transactions and a safe haven during market volatility. Imagine being able to send money to anyone, anywhere in the world, in just minutes instead of days, and paying only a fraction of the usual fees. That's the power of USDC, and it's already changing how people and businesses move money globally. Circle's innovative technology is not just transforming payments, it's also revolutionizing business transactions, cross-border commerce, and even how developers build the next generation of financial applications. As a trusted and regulated provider, Circle stands at the heart of this digital revolution. Its commitment to compliance and transparency has earned it partnerships with major financial institutions and tech leaders worldwide. In this series, we'll break down Circle's financials, explore its ambitious growth plans, and take a close look at the risks and challenges you need to be aware of before investing. Remember, having the right facts and a clear understanding of the market is the only way to make smart, confident investment decisions. Stick with me throughout this deep dive, because in the world of investing, knowledge truly is your best asset. Don't forget to subscribe for more expert insights and stay ahead of the curve in today's fast-moving market. Let's get started and find out if Circle deserves a spot in your portfolio. Are you ready to discover the future of finance? Let's go. Let's get into the numbers, because performance matters. Circle's latest report, $658 million in revenue, up 53% year over year. USDC circulation hit $61.3 billion, a 90% jump, and quickly surpassed $65 billion. This explosive growth shows USDC is gaining trust worldwide. Circle earns interest on its massive reserves, fueling its revenue. Yes, there was a reported net loss of $482 million, but most of that was due to one-time, non-cash charges from going public. Operationally, Circle posted $126 million in adjusted EBITDA, a 52% increase, and a robust 50% profit margin. The takeaway: Circle is scaling fast and profitably. Don't be fooled by headline losses. Look at the underlying business strength. That's what separates smart investors from the rest. If Circle's numbers are so strong and the company just posted impressive earnings, you might be wondering what could possibly cause the stock to suddenly dip. After all, strong financials usually mean investor confidence and rising prices, right? So why did the stock drop so sharply, even as the company's fundamentals looked better than ever? The answer lies in what happened right after the earnings report. Following a 17% post-earnings jump, Circle surprised the market by announcing a secondary offering of 10 million shares. Essentially, they decided to issue more stock to raise additional capital. This move, designed to fuel future growth and innovation, triggered immediate fears of dilution. When a company issues new shares, each existing share represents a slightly smaller ownership stake in the business, which can make investors nervous about their piece of the pie shrinking. The result? A knee-jerk sell-off as traders rush to react. But it's important to note that this offering is tiny compared to Circle's massive $100 billion-plus market cap, barely a drop in the bucket. What we're seeing here is a classic case of market overreaction. Short-term noise that doesn't actually reflect any real change in the company's underlying fundamentals or long-term prospects. In fact, some analysts now view this dip as a golden buying opportunity. They argue that the stock is now undervalued and that the market's reaction has created a rare window for savvy investors to get in at a discount. The secondary offering actually signals ambition and confidence in the company's future, not weakness. It shows that Circle is raising funds to invest in new projects, expand operations, and drive even more growth. For patient investors who are willing to look past the short-term noise, this could be a rare chance to buy a market leader at a meaningful discount and benefit from future upside as the company grows. Sometimes the best opportunities come when others are nervous, when fear creates value for those who can see the bigger picture and act with conviction. Circle isn't just about USDC. It's building an entire ecosystem designed to transform how money moves around the world. The company's vision extends far beyond a single stablecoin, aiming to create a foundation for the next generation of digital finance. By connecting people, businesses, and developers, Circle is laying the groundwork for a more open, efficient, and accessible financial system. With 35% of the $180 billion stablecoin market, Circle is expanding fast. Its influence is growing as more institutions and individuals turn to digital dollars for security and speed. This rapid adoption signals a shift in how value is stored and transferred globally, and Circle is at the forefront of this movement. The Circle Payments Network, or CPN, aims to revolutionize cross-border business payments using USDC for instant, low-cost transfers. By eliminating traditional banking barriers, CPN empowers companies to send and receive money worldwide in seconds, not days, and with far lower fees. This innovation could reshape global commerce and make international business more accessible to all. Circle is also launching the ARC blockchain, a secure, regulated platform for developers to build next-gen financial apps. ARC is designed to support compliance, scalability, and interoperability, making it easier for innovators to create products that meet the needs of a rapidly evolving digital economy. This move opens the door for a wave of new financial services built on trust and transparency. These moves position Circle as the backbone of tomorrow's financial system. By investing in infrastructure and technology, Circle is setting the stage for a future where digital assets are seamlessly integrated into everyday life, powering everything from payments to lending and beyond. The company projects 40% annual growth for USDC and is targeting new revenue streams beyond interest on reserves. Circle is exploring opportunities in payments, treasury services, and developer tools, aiming to diversify its business and drive sustainable long-term growth. Investors see a company with vision, execution, and a plan to lead the digital finance revolution. Circle's leadership and track record inspire confidence, attracting partners and capital eager to be part of this transformation. This isn't just a stablecoin play. It's a bet on the future of global finance. Circle's strategy is about building the rails for a new financial era, where money moves as freely as information across borders and platforms. Stay tuned for more updates as Circle's story unfolds, and watch as it continues to shape the digital economy for years to come. Wall Street is split. Bulls see a bargain, bears urge caution. Bulls like Jeff Cantwell rate Circle a strong buy, citing its first-mover advantage and the recent price dip as a prime entry point. Technical analysts point to oversold signals and chart patterns suggesting a rebound is likely. Ideal buy zones are flagged between $139 and $144. Bears, like Ed Engel, worry about short-term margin pressures and the impact of the secondary offering. They recommend waiting for clearer signs of strength before jumping in. Both sides agree. Circle's long-term potential is huge, but near-term volatility is real. Listening to both perspectives helps you weigh the risks and rewards. Make sure you're investing with your eyes open. Balance is key. In digital finance, regulation can make or break a company. The new Genius Act in the US gives stablecoin issuers like Circle clear rules and legitimacy. This regulatory clarity is a game changer, opening the door for big banks and corporations to adopt USDC. Circle's proactive compliance now gives it a major edge. Analysts see this as a catalyst for explosive growth and mainstream adoption. But globally, the picture is mixed. Europe and Asia still have regulatory uncertainty. Different rules in different countries could create challenges for Circle's global ambitions. US clarity is a huge win, but international risks remain. Investors need to watch the global regulatory landscape closely. Regulation is both a tailwind and a potential headwind. Stay informed to understand the full risk picture. Circle's next earnings report is critical. Watch USDC circulation, continued growth signals strong demand. Check adjusted EBITDA and profit margins for operational health. Listen for management's outlook on margins and growth. Look for updates on the Circle Payments Network and ARC blockchain. Are they gaining traction? Most importantly, pay attention to the company's guidance for the next quarter and year. Strong guidance can send the stock soaring. Weak guidance can do the opposite. These are the signals that will shape Circle's stock in the near term. So, is Circle a golden opportunity or a risky bet? The upside. Circle leads a booming industry. USDC adoption is surging, and new products could unlock massive markets. US regulatory clarity is a huge tailwind, and the recent dip offers a potential entry point. But risks remain. Competition, global regulation, and market volatility can't be ignored. Circle is a bet on the future of digital finance, with big rewards and real risks. Weigh the fundamentals against the volatility. Only you can decide if this fits your portfolio and risk tolerance. Make your move with eyes wide open. We've covered Circle's business, financials, growth plans, and the bull-bear debate. Now, it's your turn. Review your goals and risk tolerance before investing. Circle suits long-term investors who can handle ups and downs. Decide your strategy. Buy now, wait for earnings, or average in over time. There's no single right answer. Choose what fits your plan. The best investment is in your own knowledge. Subscribe, keep learning, and make decisions based on facts, not fear. Thanks for watching. Here's to your financial journey.